We are here starting another podcast with Elevate12. Today we're going to be talking about finance. We are in the biggest country and the best opportunity in the whole planet, and still, some of you will spend your whole life and not have wealth just because you did not know how to play the game of finance and the game of understanding how to create wealth, leveraging using the resources that's around you. So for that, we have one guy here that we know this guy for over 20 years. I have been carrying the real estate license, over 20 years, and I've been helping hundreds and hundreds of people. And just recently, we're going to be full time helping the community how to get your next project, your next house. We are a general contractor. We're going to be using all our expertise in construction, but we're going to be excited to be working with the financial guys that's going to come and is going to educate you how to unlock your potential. This guy that I bring here today, like the first time that I ever asked him any help to get finance, he just made it so simple, so simple. And I would like to introduce you, Todd Seir. Welcome here to the podcast. We are excited to have you on board and to enlighten our spectators about finance. You did not start with finance. Your background, it was more in movies and storytelling. How you start your master's degree in a completely different era? Can you tell me a little bit more about you and how you start your career and what is your background?
Yeah, so I my first career was in the film business. Went to the American Film Institute out in Los Angeles, and gave a try at being a professional screenwriter for about a decade out there. Um, the movie business was not being super great to me, and my wife and I decided we wanted to move somewhere with affordable housing, close to the water, love history, and went to New Orleans. Checked out some areas in North Carolina. Came to Charleston. We were in Charleston for about 30 minutes. Decided this is the place we were going to move. About 6 months later, I moved out here, bought my first house. Had a had a great realtor experience, and the lender that I worked with put me in a horrible loan, very predatory loan. They're legal now, something called pay option arm. And through that process, I like real estate. I was looking into being a real estate investor and talked to the agent that I worked with. She recommended I get into mortgages. I reached out to somebody who happened to be from California, and that was my first boss in the mortgage space for a little brokerage called Zydeco Capital, and got into the business. I love helping people, particularly first time home buyers, helping people that didn't think they could buy homes get into a property. Um, and one of the things that I really like about this business is your effort is rewarded. Um, Reflecting back in the screenwriting, the movie business, that can be just years and years of work without really breaking through. One of the things I love about real estate, if it's mortgage, if it's being a realtor, is the effort you put in is directly correlated to results.
Wow,
I enjoy that.
So it's pretty interesting because I noticed that usually people that find a career that you have passion, you start with something hurtful, something that you had painful in your life, and you had a great experience in the real estate, but somehow you were not very excited about the mortgage that you've been given.
Yes.
So you found ways to say, okay, now that I have that, I don't want others to go through the same process.
Yeah.
So, and that's what I noticed since the first time that you helped me to get finance. You really try to figure out every way that you can help your customer. And I want to tell you that is watching this podcast. Sometimes you get disappointed. You go by a big bank. I'm not gonna say any big names here, but you go to those big banks and really they create a big wall between you and how you get your dream come true. And that's what I did too, because I felt that would be very difficult. When I went to someone like Todd, he made my life so easy that give me that comfort level that even if I was not 100% prepared, It just may take 1 month, 2 months, 3 months. You know what? I usually tell people, if you just follow what you bring the recipe book, you'll be ready.
Yeah.
So would you say, Todd, that if you give directions, anyone can get finance if they follow your protocol? Is that something?
Absolutely. I would say almost anybody can buy a house within 6 months, even if they're not there right now. I mean, maybe if there's a foreclosure, a bankruptcy, or something major you're right in the middle of, that might not work. But for 99% of people listening to this, if you can't do something now, you will be able to buy a home in 3 to 6 months. Your experience with the big banks is very typical. They have a checklist. They go through this. They want to see A, B, C, and D. And if you don't fall into that bucket, that list, they're going to say no. It's not no, but try this. I love solving problems, getting in on those tough deals, and you brought me quite a few tough ones throughout the years. But I like the problem solving aspect of this. I'm not with one bank. I brokered over 160 different lenders. So if I can't get it done here, we can get it done somewhere else. If I can't get it done anywhere that I work right now, we'll put together a game plan to get you there as soon as possible.
So Todd, explain one thing. Sometimes people get confused. Hey, what is the difference between a mortgage broker and a regular bank? Can you make what is the difference? You guys go to the same institution to get money. Just make it very easy for the spectator to understand. What is the difference and how approachable you are and to educate and where the money coming from?
Yeah. I mean, so if you go to a big bank, let's say Bank of America, Wells Fargo, right?
Yes.
They have one set of guidelines. They're lending their own money for their own rules. It's very, very different than a mortgage broker. So we may work with Bank of America or Cross Country or Movement Mortgage, all those different places. We broker to them, but we have access to all those different banks, all their different guidelines. So if it doesn't work at Bank A, we can try Bank B, try Bank C. So that's really the biggest difference. Is if you're talking to a bank, you could say if you're trying to figure out if you can get something done, you could go talk to 160 different banks, or you could go talk to a broker that works with 160 different banks, and they will go shop it for you and find the place that's going to be the best match for you.
Wow. It's so you really have a program for almost everybody, and I would say everybody. Doing real estate, Todd, I realized that you mentioned before somebody going to a short sale or they go to a bankrupt, and they have seller finance up there, and they have hard money, and they have ways to do things, but you are very, very creative. And this didn't happen overnight. You've been a branch manager, you've been a general, been in different seats. You really have different seats. What is the difference between the Todd today and the Todd of 20 years ago? What would you say that this Todd today know more about that 20 years ago they couldn't do? It's like the maturity and the gray hair, the salt and pepper there. Can you tell me more what would you do different? What would you do different?
I mean, I'm very happy with the path that my career has taken. Like you said, I've worn almost every hat in the mortgage business. I've branch manager, sales manager. I've managed pipelines, hundreds of millions of dollars. If you're familiar with the author Malcolm Gladwell, one of the things he talks about is mastery is achieved over 10,000 hours of experience. And for example, Bill Gates got into computers almost before anybody else. He achieved that level of mastery before other people in his field. The Beatles, for example, were playing shows 12 hours a day in Germany before they got big. And that exposure, that 10,000 hours, the 20 years, I've seen almost every deal, every way something can be structured. And that gives me a unique perspective in helping people. And there's problems I know how to solve now that I didn't 20 years ago. There's problems I know how to solve now that I didn't know how to solve a year ago. So it's just a matter of that experience in my current capacity, brokering with the largest mortgage brokerage in the country. Feel like I have more access to solve problems than anywhere I've ever been before.
How many states can you finance right now?
I'm very focused local. I focus on South Carolina.
You are in the Low Country area since.
It's 2002 I moved out.
So you really know the market, and
Yeah.
pretty much when somebody say an area where they're gonna buy, and what do you think when people say, "Hey, I'm buying this area"? How you bring process? Because I'm sure you already know the area. You're thinking about what they're gonna finance if it's below value. What comes in your head to try to figure out I'm sure for every client, you try to figure out a solution for that. So
I mean, I'm more focused on the finance solution. So I'm thinking about what is your budget? What are you comfortable paying each month? How much cash can you bring to this transaction? Very much try, and I hope you appreciate this as one of my realtor friends, to not step on the realtor's toes too much, because you truly are the expert in the areas. You have access to MLS and different forms of data and expertise that I may not. Certainly, I have a lot of very friendly conversations with my clients, but I feel like my number one goal is figuring out a financing solution that works for them. So you figure out the neighborhood they need to be in, what that means in terms of the offer, how we're going to structure that, and certainly I'll help you put that offer and that structure together. But I want to make sure you're comfortable with your monthly payment. What you're For a lot of folks, particularly responsible folks, what you qualify might be very different than what you are actually comfortable paying.
man, you probably did thousands and thousands of closing over the years.
Yeah, it's thousands now.
If something comes to your memory, tell me one episode of one family that you have to walk against and the excitement that you were on the closing table. Can you just one that comes to your head so we can?
I mean, very, very early in my career, we had a loan officer that worked at my company that had an emergency, had to leave, and his clients were handed off to me. They had been told not no by their local bank, their local credit union, a little bit lower credit scores than would generally be accepted at your credit union type of places. And we were able to get them into a home, no money down, 100% financing, and just the sweetest, sweetest couple. I went with my boss at the time. After closing, we went and planted a little tree at their house. And the wife still sends me pictures almost every year of how big that tree is, like 30, 40 feet high now. Um, so that's really stuck with me. I've had clients where it, there's repairs that were required to close an FHA loan, and I've gone and built handrails at their homes, um, done those type of things to just to help people move forward. Like I said, I love helping people get into
So you, Tyra, is the director of Joy,
director of joy. Yes.
and I think that most people associate the word mortgage with stress, fear, rejection. Why Joy? What are the rest of getting us wrong?
I mean, there's a few things there. I had a coach early in my career that said that the person that figures out how to make mortgages fun is going to be a billionaire. And that really stuck with me. And I worked in places in different points of times in my life where it was a little stressful. Maybe it wasn't joyful. This stage in my career, auto mortgage is something I really created from the ground up, and I wanted joy to be the foundational principle there. I want the clients I work with to enjoy the process. I want the realtors I work with to enjoy the process. So that means communicating, make sure they understand what's going on, being transparent with fees and timelines. And I think it's a reminder for me and everybody that I work with that I want this to be a joy-based experience.
Wow.
Now, when I'm asking for a bank statement for the third time or asking what that's deposited, it's not always going to be 100% joy in that experience, but I want it to be a foundation that we're always looking at everything through that lens.
So I feel like we need to get, really need to get a panel and creating a little platform here, Todd, where we can actually get folks to understand. Because if we educate more, if we have more of education for for folks, they should be able to unlock their potential.
Yeah.
I believe it's all education.
Yeah.
When you explain why you do each thing, and I'm gonna challenge you. I have here on this podcast, we're gonna have some video products, we're gonna have some info products, and we're gonna have 2 times a month this guy coming from Atlanta. I think we can just create some KA questions that's going to be good for you. It's going to be good for me and for my platform.
Mhm.
And I'm going to be able to give to the prospect. I'm just going to tell you right now, I'm going to do a spoil. I have a platform here that we're going to have over 20,000 people, local people. And those people, they're going to have access to questions and answers.
Mhm.
And through the education, we can get just 60 seconds video explaining things. Why you do the bank statement, what that is going to cause. So sometimes people just need to understand more. So you say, you know what? If I do this, I can get it.
Yeah.
So I feel like the most of the time that we lose is doing that. And you really wanted these people to have the best experience.
I mean, I think education and joy are very closely, knitted together here, because when people get scared, fear is generally a response to not understanding something. So if we can educate people, they understand why we're structuring a loan this way, or why you need to get the credit score in this particular place, or do this particular thing with your tax returns or bank statements. That helps. That takes the fear away, and if we take that fear away, you've got room for joy.
Wow. Todd, let's talk about first-time home buyers.
Mhm.
First-time home buyers. Uh, I know you have different factors. What is the benefits? What the government provide to the first-time home buyers? And explain, educate the spectator which kind of benefits, the interest rate, the percentage, uh, explain that they can live in a house and don't pay if they the capital gains if they stay in the house for 2 years. All those things. Can you tell us a little bit of that?
I mean, specifically to the financing, there's almost an infinite number of programs out there for first-time home buyers. It can be very complicated to go through that, and a lot of what's advertised as great for first-time home buyers is not necessarily the case, which is why I think you need somebody experienced that's worked in that field. I mean, obviously, there's programs like South Carolina State Housing, Palmetto Heroes, which provide grants to help with the down payment. So FHA loan, which is kind of your standard first-time home buyer loan, generally requires a 3.5% down payment. There's first-time home buyer programs, grants, down payment assistance that will help with that down payment.
And who is qualified for that? It might be firefighters or school teachers or who military. Who's qualified for this grant for the Palmetto State?
So the Palmetto Heroes specifically, and they actually change that category each year, but it's typically first responders, police, nurses, firefighters, those type of categories.
Teachers?
Teachers, it's year to year, but typically, yes, that is included with Palmetto Heroes. That's a subset of state housing. So Palmetto Heroes is kind of a subset of overall state housing, which is available to almost everybody. That's down payment assistance with an income cap. So that generally depends on what the median income is in the county that you're looking at. So for most of the Tri-County area, depending on if it's 80% or 120% of median AMI or area median income, that's 88,000 to 120,000 plus.
And is that true that the first-time home buyers also have a better interest rate?
In most cases, it's somewhat of a misnomer. Most of the what historically were called first-time homebuyer programs are now available to repeat homebuyers. It's just not necessarily that you can own another home at the same time. They're not set up for investors that are buying their 15th product property. They're intended for people that are buying their first home or maybe just sold a home and upgrading to the next property. The interest rate wise, it tends to be fairly similar. Some special programs will have a slightly reduced interest rate, but I don't want to discourage people from if they don't qualify for that one particular program. The regular market rates FHA, which is historically considered a first-time homebuyer program, is really available to anybody, and that has right now about the lowest rates anywhere.
Sometimes people, the government, I remember when I bought my first house in 2001, and I believe that I received like a tax incentive that was $8,500. Some time to time they change. What is?
Yeah, throughout time, there's been different incentives at the federal level to encourage home buying. So I believe the first house I bought in Charleston, there was also a tax credit that was applied there that was essentially 8,500 or 1,600 or $16,000 off your gross income, so you're paying tax on less money. There are still some programs out there. The ones I think of off the top of my head are related to solar financing. There's a lot of programs like that where you can get additional funds to install solar on your house and then get tax benefits related to that.
And I see, Todd, that a lot of neighborhoods uh, that are developed in the low country area, like Ken Bay, um, they part of the program called USDA.
Yes.
So can you tell a little bit more about those areas? And I'm sure that's going to happen a lot near Volvo, Santee area. I've been checking those properties. I have access to 220 lots right now in that area. We're working very close to get a few local builders together there. And I see some help on these areas. Explain what the USDA and how come they have very much incentives on that.
Yeah, so the USDA, same organization that regulates our beef and those type of things, a very large government agency. They created the USDA Rural Loan Program to encourage home buying in more rural areas where financing might not be as readily available. Um, the kind of nice thing in our area, the rural maps for the greater Charleston area were drawn a long time ago, and there are areas that are fairly populous that are still eligible for USDA financing. I believe over 95% of the actual land in South Carolina is eligible for USDA financing. So USDA is almost identical to the FHA loan, very similar, kind of a first-time home buyer program. The biggest difference being that it's no money down, whereas FHA requires a 3.5% down payment. USDA requires no down payment. It also has mortgage insurance like FHA, but the mortgage insurance is quite a bit cheaper, about 60% of what it is on an FHA.
Wow. I Sometimes people get scared about interest rate because we don't have the best interest rate right now. But coming from Brazil, I can tell you right now that the interest rate in Brazil, if you are 1% of the society, you're still gonna pay 11% a year,
Yeah.
13% a year, and this is like this is really good there. What is the prime right now?
I mean, your average 30-year fixed right now, and we're near a 1-year high right now, and in early August of 2026, is in the high 6% range, which seems high if you're comparing it to the last 20 years. If you look at the last 60 years, the average interest rate's been more in like the 7 to 8% range. Almost all of the last 20 years, we've been below that range, and we saw the lowest rates in history, and I doubt we'll ever get back to them related to COVID and the financial incentives and disincentives.
I, I always like to encourage people to don't worry about too much on your interest rate. Find someone that get you the property that will give you the necessary equity. So in 2 years, you have a few $100,000 on your pocket because you've been assisted and someone brought you a great property, and real estate's going to work for you itself.
Yeah. I mean, particularly in Charleston, you know, interest rates go up and down. Home prices have not really gone down outside of the crash where there was a very, very short blip in 2007, 2008. Property values go up. And I think specifically to this rate question, think about right now. Interest rates are a little bit high. I think it's silly to call them high, but it's psychological. A lot of people think 6.5 is high, right? So there's a lot of people that are on the sidelines not buying right now. If interest rates go down to 4%, we are going to see the number of buyers 3x, 4x. And what happens when more buyers come into the market? Home prices go up, right? It's very, very difficult to time this perfectly or outpace the market, particularly in a hot market like Charleston, where property value goes up over time. You could buy the property now for 6.5%, wait 5 years and maybe get a 4.5% rate. And now that property is worth maybe 2 times what it was 5 years before.
So a few $1,000 that you spend doesn't really. It's a game. So if you buy real estate, you're creating wealth.
Yeah. I mean, it's a bit of a joke in our business, but I'm sure you've heard the marry the house, date the rate thing, right?
Mhm.
So the logic behind that is marry the house, get the house now at the price you can. If rates go down, you can always go and refinance into a lower interest rate. So the rate is flexible. The price is not. Everybody that I've talked, I mean, particularly, we've been in a kind of relatively flat market for the last 4 years in terms of interest rates. I've had a ton of clients that have been sitting around waiting for rates to drop, waiting for home prices to go down. And almost, I would say 99, 100% of the time, the math has not worked.
Wow.
They waited. That house they wanted last year is now worth an extra $30,000. If the rate's a quarter point better, they're still paying more.
So if they would pay an extra $4,000 a year, $5,000 a year, but the house increased in value in over $30,000, so they actually left money under the table.
Yeah.
So Todd, you work with auto mortgage. You guys are part of a mortgage company. You say it's the largest mortgage country in the country.
It's the largest mortgage brokerage in the country.
And how many brokers you work with? You say
so over 160 lenders. So
over 160 lenders.
Banks, lenders that we work.
And we're talking about you have access to FHA loans. Tell me all different type of loans, and the people that's watching, maybe you are here and you say, you know what, I'm a VA. You can get VA loans, or you can do conventional. You can do VA. or FHA, you actually finance foreign national for people that's abroad. We have some folks that come here from other countries that they have income to prove, and you can get finance from to these folks, and you also get perhaps finance to some folks that they don't really have the social security, but they develop credit over their tax ID. So tell me a little bit more of the flexibility and all the type of programs that you have, if you could.
Sure. So kind of at the umbrella level, there's two big categories to think about. There's agency loans. So that's going to be FHA, VA, USDA, and your conventional, which is Fannie Mae and Freddie Mac. Those are your kind of traditional. They're going to have the better interest rates, lower down payment options typically, and income verification is done in a very traditional manner. W-2s, pay stubs, if you're self-employed, 2 years of tax returns. So that's one segment of the market. The other segment of the market is currently called non-QM, maybe referred to as alternative financing or subprime or Alt-A. But it's for those kind of outside the box type programs. And that's where we get into the very flexible things that we're talking about. So it could be ITIN loans. I have a loan now truly requires no income, no employment whatsoever. You just have to put 20% down. If you were an investor, there's DSCR loans where instead of qualifying with your personal income, you're qualifying with the income that the property generates. So all they're looking at is the rent or the projected rent on that property relative to your mortgage.
So you mentioned now you have two categories. You put in one umbrella. What's the name of the loan?
Agency
loans that package the VA, FHA, conventional loans. The next one would be a non-conforming.
Yeah.
And basically you told one of the ITIN that you finance, right? You're working with some folks right now. I just want you to pause there. That loan that you're financing right now, the ITIN, what is the requirement? And tell me how the tax spectator can find you, and just make it very easy for them to understand how to get that loan.
Okay. So the ITIN loans, and it is a little bit different based on whether, there's a work visa in place, green card. And in that category, I can actually work in both places. For the first time in my 20 plus year career, I have access to a lender now that will do loans for people that are truly here legally, like don't have a visa, don't have any.
Just a passport.
Just a passport.
Okay.
That's a little bit.
To be honest, which is smart.
Yeah.
If they give a little bit more of a down payment, why they cannot have a house and we accelerate more business in the country? Because a lot of those guys, they worked so hard for this country. And you know what? They did not have the opportunity, but you know what? We need them here. That's a federal problem. But bottom line is, if they put 20% down?
That, if it's truly illegal, it's going to be probably 20 to 30% down.
Which still give them access to a wealth in the country. And
start building wealth, right?
Yes.
More traditional ITN, if you can show tax returns, you got a work visa, all the paperwork's, in order, so to speak. Those can often be done with as little as 10% down. And I mean, even the agency loans that we talked about initially, with a valid work visa, you can get a conventional loan, you can get a Fannie Mae loan, you can get a USDA loan, an FHA loan. So all of those are options. The kind of general rule of thumb to think about is as you get more creative, interest rates go up and down payments go up, right? So if
being more creative, like you just mentioned about the second loan, like using your business to finance. Let's say I have a lady that she owns a cleaning business, and she got like maybe a $40,000 a month going through her account, and she need to buy a property to create office with the laundromat and something that she can double her business. How can we help her?
So that on the traditional level, if you were looking at it from a traditional underwriting for a residential or commercial, they're going to look at tax returns. How's the business doing? And, the U.S. tax code is set up to incentivize business owners. There's a lot of tax breaks. So that you very often have somebody that may be making $500,000 a year of real income, but it's getting a little creative on their taxes, and maybe their net on taxes is significantly lower. So one of the programs we would use in this particular case is a bank statement program. And, you referenced that, $40,000 a month is going through these bank accounts.
And that used to be the old CISA, state income, state asset.
Well, in the CISA, the stated income stated asset, that was literally like we stated it. It was like, you tell me you make $40,000,
I got you.
I write it down.
Now you need
We're-
to see
we're
the
done.
statements. Yes.
The bank statement loan, typically you're looking at the last 12 or 24 months of bank statements and looking at the average deposits there. So may ignore the tax returns or maybe look at tax returns, but regardless of what that number is from a traditional income calculation, we're going to look at what is actually going through the bank account, whether it's personal or business. If it's business, there's usually some kind of an expense factor applied, assuming obviously there's expenses associated with that. If it's your personal account, a lot of the times you can use 100% of the deposits there. So and very commonly for realtors, you may have a realtor that's very, creative with their write-offs on on their tax returns, but we can show bank statements that look, on average, they're putting $25,000-$30,000 in the bank every month.
So for that lady that she want to buy investment property and she's going to use as her office,
Mhm.
and she got $40,000-$50,000 every month, how can we help her?
I mean, that would traditionally be a bank statement loan. If it's an investment property, and you may be talking on commercial, which does get a little bit outside of my wheelhouse. So
Okay.
I have access to some commercial channels, but I don't historically close commercial loans. If it's a mixed use property, like she's going to live in part of it and have business in part of it,
Okay.
that can be a residential. But both commercial and residential lending have this aspect where you could look at a bank statement program. If it's an investment, particularly, and you get into outside the box financing, it's probably 25% down as minimum down payment. It's kind of your starting base there.
If the property is worth $500,000 and we do a contract for $400,000 and the property appraised for $500,000, is that $100,000 can be count as 25% down?
Not without
Or
getting
20%
very,
down?
very creative. Traditional financing, and I'd say 99% of the loans I close, if you've got a purchase, the calculations are going to be based on the lower of the purchase price or the appraised value. So it could appraise for $1 million, but if your contract's for 400,000, everything's going to be based on 400,000.
Yes, I got you.
Now, once you own the property, now the value becomes, now you can leverage that to a much greater deal on a refinance on loans down the road. Now, if you're getting into owner financing or some commercial financing, somewhere outside the box, really even beyond, we talked about agency and non-QM or non-conforming. The third level, it's starting to get into the hard, soft money, private financing. You may be able to leverage that type of equity.
I got you. Man, it's a lot of parts and pieces, and I really think that we're gonna create 1,000 questions for you, Todd, and we're gonna have like a 60-second answers, and we're gonna put in our platform so people can just go and link, and we can get like we make this down to a science. Now, you say that you traditionally you work more on the residential, can close some commercial, and when you see as residential, like for that lady, as long as she live at the property or she use that for residential use, mixed use, it will be counted residential. Another thing is multiple properties, like a triplex or a quadruplex.
Yes.
As long as you live in one of those properties, you can just acquire like a 4 units property as a residential, correct?
Yeah, and 4 is the magic number there, right? So once it goes to 5 unit, that's historically considered a commercial property. A quadplex, a triplex, a duplex, single family, those are all fall under the residential financing bucket. And yes, you can buy a quadplex as a primary residence, assuming you're living in one of those units. I actually 2 weeks ago used VA financing for a veteran, bought a quadplex. I believe it was $650,000, 100% financing. He got all of his earnest money back, and he got prorated rent and the security deposits for the other 3 units. So he bought a quadplex for $650,000 and walked away with almost $10,000.
Wow, this is amazing.
Yeah.
And he's gonna live in one of the units.
Yeah.
So he's probably gonna even live in for free because the other property is
Yeah.
gonna pay his bill.
Yeah, the other property is 100% covering the rent for him.
What about that?
Yeah.
So we need to find some deals, sweet deals like that, and get you to finance, and we get to close those deals. Now, new construction, or before that, any finance for lots. Some folks that want to just buy lots right now. You have lot finance.
I do. It tends to fall into one of two categories. There's, your speculation where you're buying the lot with no intention to build on it immediately. That tends to be a little bit higher risk. banks think of everything from a risk foreclosure standpoint. If they foreclose on land, it takes a long time to resell it, unlike houses typically. So that's going to be larger down payments, a lot of the times 30-40%.
Even if when you say larger down payment, if we have a contract on the lot for 100 grand, the lot is worth 150, you're still going to use the $100,000.
Yeah.
Gotcha.
Now, where it can be significantly cheaper is if you have plans to build on that land. So if you're buying it speculation, no plans to build, it's going to be a bigger down payment. If you're buying it and have plans to build, which typically means you've talked to a builder, you've talked to a contractor, you've got contracts in place. A lot of the times you can do that with fairly minimal down payments. FHA 3.5%, VA no money down. USDA actually now has construction with no money down. So it is possible to do that with a much smaller down payment. What a lot of people call a land home package, where you're buying the land and starting the build phase together.
So if someone have a piece of property right now that's $100,000, and they have a house to build in this lot for 150,000, and this house CMA, the compare market analysis, show the value for about, let's say, 350.
Yeah.
Now you're talking about lot in construction 250. So would you do one closing altogether, or you do two separate closings?
It can really be done one of two ways, really one of three ways. If you own the land can essentially be your down payment if it's not financed. So in that example, you own a lot worth $100,000 and you need $150,000 to build. You can use that equity as essentially your down payment, would be able to get 100% financing to build in most cases there. Now, if you need to buy the lot and get the money to build on it as well, then you are going to be looking at a down payment. And once again, really based on the lower of the cost of build plus the land or the appraised value.
And how you do this construction? You do construction draws? You have like construction schedule to release the money?
Yeah, I mean, typically it's a 9 to 12 month build process there. There's draws that go on. There's a draw that occurs at closing, where the first bunch of money is sent out to the builder, the homeowner, to start. And then anywhere from maybe 2 to 5 phases throughout, there'll be a reinspection and more money parceled out as you go through. That can be done as a one-time close, where you have the initial closing, you close on the land, start the build, have say 12 months to finish. You're paying on the draws, so you're not paying on the full cost, you're paying on what's been pulled out throughout the process. Once you're all done, let's say you owe $250,000, that converts into a traditional 30-year fixed rate mortgage. That's a one-time close. Those tend to have interest rates about a point higher than a two-time or than a traditional purchase loan. You can also do a two-time close, which is really just temporary financing. Think of it like a 1-year short-term loan to get the construction finished. And once the CO or certificate of occupancy is issued, then you would refinance into a traditional mortgage.
So the construction loan usually go 1 or 2 points higher than the permanent loan.
Yeah. And once again, if you think of everything from a risk standpoint, if you're a bank and you foreclose on a house that's somebody's half-finished dream house, it's going to be pretty hard to sell that. There's very limited people that can go take that.
Do you still do the construction loan for homeowners that they build in their own house?
Oh yeah, that's the easiest, cheapest way to get financing. It gets much more complicated if you're trying to build as an investor or build spec. But I would say near 100%, if not 100%, of the construction loans I've done have been for people building their primary residence.
But they need to use the builder, or they can do their own?
There are ways that you can do your own building. You generally need another builder involved unless you're getting into that kind of non-QM world. The agency loans are going to require that you have a builder that is not one of the homeowners. What a lot of folks do there, they will have a builder that's maybe they're close with. It's the licensed contractor on it, and they're acting as a sub.
Are you able to still do construction loan for folks that own the lots, but they do have the ITIN number? With the ITIN number, you still can do construction loan if they have a builder to do that for them.
Yeah, absolutely.
This is great. We have some prospects here. What about that investor that owns 10 lots, and he want to build a few spec houses, and he got already the business plan, and he got several lots the plans, and he already have a track record of building several of those houses.
Mhm.
What is the picture that what this guy need to be like to be the best performance for you to be able to finance this guy?
I mean, the number one thing is typically a track record. It's very tough to get any kind of traditional financing to build your first investment property, right? Most lenders don't want to see that you have some kind of experience there. So you probably want to pair up with somebody for those first few properties. Once you've got a portfolio, there are options out there. Once again, most of the agency loans that we talked about, conventional FHA, those are not for investors to build homes that they're going to flip and sell. But in the non-QM world and in the commercial world, there's a lot of opportunity for them.
It is some loans out there that you cannot sell the house. They give certain programs, right? It's very much like if you sell, you're gonna have to do a penalty.
I mean, the prepayment penalty was very, very big before the crash. Almost every loan that was closed before the crash had some kind of prepayment penalty, which meant if you sold or refinanced within the first year, 2 years, 3 years, there would be some penalty assessed. Part of the legislation and the guideline changes that occurred after the crash as a response to the crash, you cannot put a prepayment penalty on an owner-occupied property. So if you're buying, if you're doing construction, whatever it might be for your primary residence, there's almost no circumstance under which there would be a prepayment penalty.
Now,
If it's an investment property, that can be very different.
now if you do have, you have a ceiling of how much, like a jumbo loan, it's changing every year. What is a jumbo loan in South Carolina? What is the pros and cons of purchasing a house below jumbo loan and more than jumbo loan?
Yeah, so the conventional loan limit in Charleston's $832,750.
Wow, it was 417 not long ago.
Yeah, I remember it was in the threes as well. So it has gone up a lot. So you can go up to that loan amount, not that purchase price, but that loan amount, and still get conventional financing. If you go above that amount, you're getting into what's traditionally called jumbo financing. Interest rate wise, most of my career, there's been jumbo financing was a little bit higher rates. In the current market right now, jumbo loans are performing exceptionally well. And those interest rates tend to be as good, in some cases even better than conventional rates. The one difference or disadvantage you still see there is they generally require bigger down payments. Whereas a conventional loan, you could buy your primary residence with as little as 3 to 5% down. Almost universally, if you're getting jumbo financing, you're going to need to put down at least 10%.
Man, I always think about creativity because I believe that everybody should own a real estate. And sometimes I see kids that just finished college and they going through a job and they have a roommate and they rent a place. Todd, what about that? If they open an LLC and they join both of the income and own that property,
Mhm.
both of them, and they get finance. Is that okay to do that? Is that like even if they're not married, just friends, but they're buying together using the both of the income? Is that something that we can get then?
I mean, if you're trying to buy a property as an LLC, meaning that these two people are young, started up their own LLC, and then just want to buy a house as the LLC, that's going to be commercial financing in most cases. That's going to be
But they can buy under their name and just put both of the income and on the property.
Yeah. The way I would suggest for those in most cases, just use traditional financing. You don't have to be married to be co-signers on a loan. It could be you and your college roommate or you and your buddy. And you can co-sign on the house, get into that first property, start building some equity, and then keep it as a rental long term. Maybe then set up that LLC and put the property in the LLC so you've got something to manage that long term as an asset. But you typically wouldn't buy it as an LLC, or at least you wouldn't get the most favorable rates that way.
Gotcha. Guess one thing is they buy it in the personal, and if they later they can do a quit claim and do some legal protection with the attorney, it's a different thing. But like it is the game of understanding how to get, like you need to follow the guidelines, and you just advising how to do the finance here, and that's the best strategy. I just think that everybody should be able to find a way to do that, and we're gonna be able to bring some accountants here to teach some of those folks because we have a lot of people here that the kids was born here and they cannot finance themselves very easily, but all those kids, if they would easily be a W-2 employee in some of the business, they would be able to get like a unlimited amount of money and leverage and grow in wealth.
Yeah. I mean, one of my favorite stories was a recent closing. There's a client I worked with probably 10 years ago, and the parents were buying the house. They did not speak any English, but their, I think, 11-year-old son at that point in time spoke English. So I was basically talking to him, who was communicating, translating everything for his parents. He called me up earlier this year. He was a year out of high school and had been working for a year. And at a car dealership, we were able to use his income from the car dealership. Most people think you need to have a 2-year job history. We were able to use his high school records as part of his 2-year job history and get him into a home with 3% down.
This is amazing.
Yeah.
This is amazing. I was able to help some folks start that just recently. He was about to marry his wife, and they want to move to an apartment. And I said, why we don't go to a house? And literally, his wife looked at me and say, I don't know, it's too difficult. She's American. And let me tell you something. Education, education, education. But even if you have education, if you don't have the proper mindset, and if you don't believe you cannot, you cannot.
Yeah.
If you really believe you could, you're there. So she was able to get a mortgage. I just pushed her to get the finance. It was 4 years ago. They stayed in the house for 2 years. This guy worked with me for 3, 4 years. He was able to sell the house, make over $100,000, and move to a different city with over $100,000 that he would not have otherwise. Thanks God for real estate. Thanks God for America and the way that we do things here. Still the best country in the whole planet. I came back from Europe, the far way. People cannot afford. Canada, they cannot afford. They all live piled up in a place because they cannot afford. The numbers does not work in Canada. I just went to several areas. Does not work.
Yeah.
You know, it's like we have the best place in the world. So Todd, I want you to explain in 60 seconds, why is the American mortgage system the greatest wealth tool available to a regular American family, to a regular working family?
I can't remember the exact numbers, but I believe 80% of the wealth for most Americans is tied up in property equity. I have a very personal experience from that. My dad, we grew up on a cattle ranch. He ended up getting in the software business, worked for IBM. We moved around throughout my life, lived in England, Australia, California. I'm privy to his finances now because I'm the heir to the estate, and we talk about these things. Fortunately, he's in very good health. It's a long answer to your question, but he felt maxed out his 401k, invested in the stock market, did all of those things like he was supposed to. And about, once again, 80% of the money, the wealth that he has now was from the properties he bought and sold and some that he retained. The 401k can only really get you so far. It's really, really tough to retire on putting 18,000.
Just go up in value, right?
Yeah. I mean, it's leverage as well, right? So I think that's, and that may answer your question a little bit better about why it's such a good wealth building tool. Let's talk about leverage. I did a video on this recently. Let's just say you inherited $50,000, right?
Yes.
You go put that in the stock market, and we'll be generous and say the stock market's going to return 10% every year. So $5,000 you're making every year there, right?
Yes.
Let's say you take that same $50,000, make a 10% down payment on a $500,000 house, right? Let's say real estate only goes up 3% a year. So it's 3% on 500,000.
It's not the 3% on the 50. It's the 3% on the 500.
So that's 1 year. That's $15,000 compared to 5,000 in the stock market. That leverage capability, and I think why the U.S. is such a good place to do this is we have a lot of really amazing low money down options to help people get into real estate with lower interest rates than you'll see almost anywhere else in the world. And if you can use that power of leverage, it's just going to exponentially grow your wealth throughout the years.
Wow, that's I like that. I like that. That's that we need to do a short and make it viral. It's very easy to get to the point. Now what does the lender actually look at? Credit, income, DTI, work history. Give us the real checklist in plain language.
Okay. So it's credit, income, assets are the big thing. Property obviously matters as well. Credit, ideally you want to be in the low 600s plus. If you can, higher better, but I close loans in the 500 credit score range. We can help you get those scores up. If you're below 580, you're typically going to need at least a 10 to 20% down payment. I work with a lot of people that start in the 500s, and we can do some quick work to get them into low 600s into an FHA loan most commonly. Income, if you're W-2, we're going to look at your pay stubs, what you're making. You don't have to have been on your job for 2 years. You can actually even have an employment contract that you're starting at Boeing next month, and we can use that income to qualify as long as it's a guaranteed number. Income, general rule of thumb, most lenders are looking and they want to see no more than 50% of your gross income is going towards all your debts, including your current or new housing payment. So if you make $10,000 a month gross, 5,000 would be your cap for 50% DTI. So let's say you have $1,500 car payments, credit cards, student loans, that would leave $3,500 a month for a mortgage payment. You might not be comfortable with that, but that's typically the threshold.
If someone just moved to Charleston and they got a job opportunity, they got a letter, they're going to be working for 3 years with this company, is that enough to be qualified if they have just the letter?
If it's W-2 guaranteed non-contingent. So I get this a lot for people that are hired into the police service. They may be a background check still pending, or they have to go through training. You typically wouldn't be able to do that. Boeing, most of the time, it's got a background check and some other things going on. But once those contingencies are cleared, you can use that straight away. Now, once again, this is W-2 guaranteed. If they're coming on and then the letter says they make 100,000 and we expect with commissions and bonuses they're going to get an extra 50,000 a year, we're not going to be able to use that extra piece.
So,
And if they're 1099, they're probably going to need at least a year history, if not 2 years.
well,
And once again, that's just your agency loan.
so my daughter's boyfriend, he just got accepted. He's going to be a fireman, and he finished college and he got a very good job. So literally with that job, I think he's going to be making 120 grand a year. And being a fireman, so he's a
fireman out of college is making 120 a year.
Yes.
That's awesome.
It's like
is that in South Carolina? Or
that's
like
right. It's here. And it's like he got a degree, and it's like he's gonna be in a different class. So the question is, so you get the incentive, like you actually gonna be able to maybe get like the down payment is gonna be paid because you're in a service work. Potentially.
Yeah.
And you have the guarantee you actually can get a house right away because you're gonna get like a W-2.
Yeah.
And and my daughter's gonna go to nursing and probably MUSC the next, I don't know, 8 months, 10 months. So she's gonna get what, $80,000 to $100,000.
Yeah.
So it's like just with that job offer is sufficient to be able to get that.
Yes.
Now I want to change a little bit. I want to ask you renovation. We have a lot of folks that want to sell their house or they want an improvement of the properties and home construction profit. What we have on those properties, we have what they call old trend. I hate to see people sell a property where they leave all the money under the mat because all they needed to do is to spend maybe $100,000. The property they could get an extra $200,000 in equity if they bring up to the new trend. How it works with the construction renovation loans?
So this is one of the areas where we potentially get creative and look at different angles. So what I typically tell my clients when they're reaching out, whether it's to refinance or purchase with renovation financing, is it's an expensive way to get money to rehab a house. If you try to do a traditional renovation loan, once again, it's a little bit higher risk, so higher interest rates, lower caps in terms of loan to value. So if you can finance it in a way that does not involve a bank with the contracting work and the specifics, like FHA 203K loans is kind of the most popular one historically. And they're known for, 20-page contractor bids with the number of 2x4s and what type of screws you're using. It gets very, very detailed, become expensive. So if you can do it, either self-finance it Or in the case, the first thing I would be thinking, an example of your client that if they put $100,000 into the house, they could sell it for $200,000 more, would just be looking at a simple cash out refinance or home equity line that has nothing to do.
You do that. You do the relock.
Yeah. So that's going to be a cheaper, easier way. Just go get that $100,000. You don't have to tell the lender what you're doing. I mean, they may ask, but they're not going to. If you say I'm getting $100,000,
You have the
house,
accurate. Use the accurate
Yeah.
leverage to get you what you need.
Yeah, that's going to be the cheapest, easiest way to do that typically. Now, if they're buying a house and it's like falling down and they need the rehab money to be able to move into it, then we'd be looking at a rehab loan.
Now let's talk about coming from security to freedom, one house to a portfolio. How can we help those folks? They own their home, they put a tenant, they want to go to the next.
Mhm.
They have accurate. How can we help? How many houses can you have under your name without compromise anything, as long as the house, the tenants pay for the mortgage? Can you educate? Can you show how to build a portfolio? 101, how to build a portfolio using Todd order and a plan of action.
Yeah, I mean, I would say the investors I've seen that are most successful and have the least friction on these properties typically is they own a primary residence or an investment property if they're already there that's got a decent amount of equity, and they have a home equity line, essentially a credit card leveraged against their house that they can pull from.
Mm-hmm.
They're going to use that money for the 20%, 25% down payment on an investment property, and then pay off that line over the next year or two. So, and then they can just keep reusing that credit line over and over and over again. So they don't have to come up with that 20% of every new home that they buy.
So basically, you create the accurate, you do an accurate line, and keep putting as a down payment to do the second property and the third property and so forth.
Yeah, so let's say they got a $600,000 house, they owe $300,000. We're going to get them a $200,000, $150,000 equity line. They're going to use that for the down payment on the next property. They'll get an agency first mortgage that maybe requires 20% down, which is $100,000. They'll use the equity line for the down payment piece, pay that off as quickly as possible with the rent proceeds from the home, and that's freed up. Now they've got that equity line for the next property. You can do that over and over again.
How many properties they can have?
Really unlimited. I mean, the new housing bill that just passed, I think institutional investors can't have more than 3,500 homes. So I'm not going to run into that very often. Conventional financing, agency financing, you sometimes get into issues if you own more than 10 properties with Fannie Mae, Freddie Mac.
So because
but then you get into the non-QM.
Okay, because I heard that you need to, it's up to 10 houses. But basically it's up to 10 houses if you use the first umbrella, which is the Fannie Mae, Freddie Mae. But you can do non-conforming. Basically, it's not gonna make a big difference because you're just gonna pay, let's say, $100 more, but you're gonna have thousands of dollars in equity.
Yeah.
Very interesting. So you that are watching right now, and you may have your property, and you say, "Hey, I have the equity. What I do next?" They scared. They say, "Hey, I don't know what to do next." You pretty much can come and you can create a 101 process, and we can just find properties, and you can work a financial plan to get them to be coming from security to freedom, so we can create a real estate portfolio.
Yeah. And I mean, right now in the market, it has never been easier to get home equity than it is right now. With advances in technology, AI, online home valuation, there are a ton of places where you can go fill out a very simple application. You link your bank statements, so they get the income from that. They do a valuation on your property. You can get funding in like 3 to 5 days.
Wow.
Really, really fast.
Right. You made it so easy.
That's what we try to do.
Well, Todd, after 20 years, I want you to tell me what separates people who actually do this from the people who watch the videos and do nothing. After 20 years of doing finance, of doing mortgage, what separated the people that actually make that happen from the ones that just watch videos and do nothing?
Yeah, it's taking the first step. It's talking to somebody. It's letting go of the fear. Talk to somebody that you trust. I've been running an application. We run soft credit pulls now, so that it's not even hurting your credit to have us take a look at everything and put together a game plan. But it's really taking that first step. And I think one of the biggest things I've learned in the 20 years is this is really an odd thing that I've discovered, which I think is interesting. I talk to dozens of people every week running applications, hundreds probably a month. The people that are the most nervous are almost always the most qualified. It's the people that call me and are like, I don't think I'm going to qualify. I'm really nervous about it. That tends to be that brain of people that are actually very responsible. So they think they're not qualified because they heard at some point in time you have to put 20% down, or I have to have a 740.
It's a belief system. It's
Yeah.
what they believe.
Yeah.
And that's who they hang out with.
Yeah.
It's the tables that they are hanging out. I tell people all the time, you're not going to change if you don't change your surround.
Yeah.
You are really the average of 5 people around you. I want to hang out with you so I can have more, my friend. So honestly, it's a start on your brain. That's it. And now, Todd, I want you to look at that camera, and I want you to speak directly to that camera. Someone is watching right now, renting, is scared, thinking this game is not for them. What to say to that person, Todd?
I mean, the first thing to do is just talk to a loan officer that knows what they're doing. Ideally, me. You can go to ottermortgage.com. You can call my cell phone, 843-557-3926. We'll have a conversation, 10 minutes. Typically, that's going to be same day. I'll have that conversation. We'll take a look at that. If you don't qualify now, I will give you a game plan to get you there very fast. And like I said, almost everybody can qualify in 6 months if they get started now. So just don't be afraid. I don't judge people. Credit score is not an indication of if you're a good person or not. What you're sitting in your savings account is not an indication of whether you're a good person or not. I love helping homeowners, so just give us a call. Let's get rid of some of that fear and start with the joy.
The game is real. That's what I want you to take from today. Todd came here. You need to get out of the couch. Don't let people stop you. You start with your one hand. You're going to be 20, 30, 35, 40. You're not going to build wealth because the people that you are sitting is putting you behind. Stop. Make a call. Get Todd involved. Let him tell you you're not ready yet. That's okay. If you're not ready now, you'll be ready in 2-3 months. We find you the property. We got the real estate. He got the finance. You got your wealth. Thank you so much, Todd. Appreciate you. I cannot wait for us to do many business.
Thank you so much.
I want you to just to say the last 2 words for the spectators.